Are you looking for ways to increase your income and achieve financial success? In this video, I will share with you the top 10 assets that can help you earn money and create long-term wealth. These assets are suitable for both experienced investors and beginners, and they can offer you a high return on investment. So, get ready to discover the smartest ways to make your money work for you. If you don't find a way to make money while you sleep, you will have to work hard all your life. For most people, making money outside of a job where you trade your time for money is either a dream or a challenge. However, wealthy people know different ways to earn money. One of the best-kept secrets of the rich is that they build and buy high-quality assets that generate money, which they use to buy more assets. An asset is any property, tangible or intangible, that generates money over time, increases in value, and allows us to make more income. In this video, I will explain in a simple way 10 assets that can make you rich. If you're interested in financial education, consider subscribing to the channel and let's get started. Let's start with the first of 10 assets that will make you money, and that is growth shares. Growth shares are simply shares of a company that give you partial ownership of that company, making you a part owner. This means that when you buy shares of a company, you receive growth shares as part of your ownership. This gives you the right to a portion of the company's profits and earnings growth. They can be from a company whose shares are traded publicly in the stock market, such as Apple, Tesla, Amazon, Google, and others. Shares can also be issued by a private company, such as your local supermarket. Companies issue shares in the stock market when they need to raise capital or funds to invest in the growth of their company. Instead of getting loans or financing, they sell part of their company's ownership. Now, how does it work and how do you make money? Let's say that the supermarket is doing well in business and has been profitable year after year. The owner decides to expand by opening more stores and needs more capital. He chooses to do an initial public offering, IPO, where he would sell shares in the stock market. This move is based on his proven business model that he wants to maintain. The company's value is $1 million and he issues 100,000 shares. To find out the price per share, we divide $1 million by 100,000, giving us a price of $10 per share. As an example, let's say Jennifer sees the potential in the company and decides to invest by buying 10,000 shares. This makes her the owner of 10% of the business. She invested $100,000 since each share cost $10. Over time, the company continued to grow and make good profits every year, reinvesting those profits. After 10 years, each share was worth $100. This means that Jennifer multiplied her initial investment by 10 times, from $100,000 to $1 million in 10 years. But to realize this profit, she would have to sell her shares. Doing so would earn her $900,000 and a return on investment of 900%. This is how growth shares can make you money and increase your wealth. The price of the shares will change daily, sometimes going down and other times going up. The price of the shares goes up when there are more buyers than sellers, and goes down when there are more sellers than buyers. This is influenced by many factors, such as the company's performance, the market conditions, the news, and the investor sentiment. One example of a famous person who has made a lot of money with growth shares is Warren Buffett. Buffett is widely considered as one of the best investors of all time, and he has amassed his wealth by investing in growth stocks like Coca-Cola, American Express, and IBM. Over the years, Buffett has earned billions of dollars by buying shares in these companies and holding on to them for the long term, letting their value increase over time. Buffett's success with growth shares has earned him a reputation as a smart investor, and his investment strategies have motivated many others to follow his example. The next asset that will make you money is shares with dividends. Shares with dividends are one of the most profitable investments you can make. Shares with dividends are shares of a company that pay a regular amount of money, known as dividends, usually every quarter, to their shareholders. This amount of money usually comes from a part of the profits that the company makes. As an example, let's say a company called Juggle, a stable company with consistent earnings, has decided to pay dividends to its shareholders. This can result in some growth for the company, but not as fast as those of shares that focus on rapid expansion. Let's say the company's share price is currently at $100, and they have decided to pay a dividend of $7 per share for that year. If we divide the dividend by the price, this gives us a return of 7%. Now, William will receive $70,000 in dividends per year, divided into 4 payments of $17,500 every 3 months from his 10,000 shares. In this case, he will receive the income while still keeping his main asset, has ownership in the company, which has the potential for further growth in price. Shares with dividends are one of the favorite forms of passive income because the money invested in these companies does the work for us, allowing us to use our time as we want, giving us the flexibility to continue looking for investment opportunities. By the way, if you're enjoying the video so far and want more topics like this, comment the word yes so I know. Moving on to the next of 10 assets that will make you money is Index Mutual Fund or ETF. The average annual return of the American stock market is between 8 and 10%, much higher than what most banks offer, 1%. Investing in the stock market is a great way to achieve this return. You may be wondering how to get this return if you cannot buy all the shares of the stock market. The answer is simple. You invest in an index fund. Mutual funds work by pooling together the money of many investors and investing it in a portfolio of assets. An index fund is a mutual fund that tries to match the returns of an underlying index, such as the S&P 500 or the Dow Jones Industrial Average. This means that it allows you to invest in a wider range of assets without having to pay high fees. The S&P 500 index shows the performance of the 500 largest companies in the U.S. If this index increases by 20% in value by the end of the year, an index fund that follows this index will likely have similar results. Besides the S&P 500, other well-known indices include the Dow Jones Industrial Average, which covers 30 of the biggest U.S. companies, NASDAQ, which contains tech giants, and FTSE 100 Index, which is the main stock market index in England. The Nikkei 225 is a stock index that measures the performance of Tokyo Stock Exchange, making it an essential tool for determining the health of the market. There are also exchange-traded funds, ETFs, that act like stocks. Shares of these investments can be bought and sold throughout the day, with prices that change constantly. They can track not only an index, but also an industry, bonds, basic goods, or commodities, such as gold, silver, oil, or Bitcoin, among others. It is expected that renewable energy companies and alternative energies will be highly profitable in the stock market in the next decade. There is a fund that brings together companies in this sector, and you can invest in it, reducing the risk and commissions of having to buy each share of these companies individually. The advantage of index funds is that they keep low rates and commissions, and are a type of passive investment. They do not require the investor to spend time on them. They can be invested automatically month after month, avoiding the highs and lows of the market on a daily basis. It also provides instant diversification in a portfolio. One example of a famous person who has made money with index mutual funds or ETFs is John C. Bogle, the founder of Vanguard Group. Bogle is credited with creating the first index mutual fund, which was designed to track the performance of the S&P 500 index. He believed that most actively managed mutual funds were unable to consistently beat the market, and that investors would be better off investing in low-cost index funds that simply track the market's performance. Bogle's philosophy proved to be incredibly successful, and Vanguard's index mutual funds and ETFs have become some of the most popular investment options in the world. Bogle himself became a billionaire by investing in these funds and holding them for the long term, proving that even the simplest investment strategies can be incredibly effective when executed properly. Today, Bogle is widely regarded as a pioneer of index investing, and his legacy continues to inspire millions of investors around the world. The next asset that will make you money is active funds and mutual fund. Active funds and mutual funds refer to investment funds that are managed by a fund manager who makes investment decisions on your behalf in the fund. These fund managers aim to outperform the market by selecting individual investments that they believe will perform better than the market average. In an active mutual fund, the fund manager will typically use their expertise and research to analyze various investment options and select those that they believe have the best potential for strong returns. Active mutual funds are typically more expensive than passive funds, such as index funds or ETFs, because of the higher management fees charged for the expertise and resources required to manage an active fund. Moreover, active funds may have higher trading costs and turnover rates, as fund managers may buy and sell assets more often in an effort to maximize returns. While active mutual funds offer the possibility of higher returns, they also involve a higher level of risk, as the fund manager's decisions may not always lead to better performance. Therefore, investors need to carefully evaluate the pros and cons of active mutual funds before investing in them. We can explore whether this method is beneficial or not in another video. The next of 10 assets that will make you money is Bitcoin. Cryptocurrencies, especially Bitcoin, are becoming more popular due to their limited supply and potential to generate wealth over time. The idea of digital currency has been around since 2009, when Bitcoin was first created. The number of Bitcoins that are expected to be released worldwide in the future depends on various factors, such as the mining difficulty, the rate of new block creation, and the rate of Bitcoin adoption. 21.4 million coins are expected to be released worldwide over time. Currencies such as the dollar, the pound sterling, the euro, and the yen lose their value because they can be created in unlimited quantities. Governments and banks are issuing more and more currency, which means that a dollar today will buy less and less goods and services tomorrow. The price of Bitcoin changes due to the current financial situation, affecting the supply and demand of the market on various cryptocurrency exchanges. Despite this, cryptocurrency experts are confident that Bitcoin will soar beyond its previous record highs and could even reach the astonishing $100,000 mark within a short time. Surely you are wondering when and how this will happen. Well, this speculation was sparked by a famous investor who recently bet that Bitcoin would reach an incredible milestone of $1 million in only 90 days. As you probably already know, in 2021, the price of Bitcoin was around $47,000. Bitcoin, the largest cryptocurrency by market capitalization, is a high-risk investment with high volatility. Therefore, you should only consider investing in Bitcoin if you have a high-risk tolerance, are in a strong financial position, and can afford to lose the money you invest in it. You can buy Bitcoins in exchanges and store them in wallets or digital wallets. Another way to acquire Bitcoin is through the purchase of ETFs or exchange-traded funds that track the price of Bitcoin. To gain monetary benefits from Bitcoins, they need to be sold. Additionally, a profitable way to make money is by lending out your Bitcoins, which can earn you a certain amount of interest. However, it is always recommended to check the current price on a reliable cryptocurrency exchange before making any investment decisions. The next asset that will make you money is bonds. Bonds are a type of loan that an investor can take from a company or government in exchange for paying back the amount with interest at some point in the future. For example, Madrid's football stadium project needs funding, so the city has issued bonds worth $1,000 each, with a 5% annual interest rate, which will be valid for 10 years. The bonds are being used to raise money for the project. Madrid pays a $50 coupon or interest every year and returns the $1,000 investment amount at the end of 10 years. While this is an appealing financial decision, it is important to remember that it involves some degree of risk. The issuer may pose a risk of not meeting payment obligations or complying with applicable regulations. When a business is in financial trouble, they may not be able to pay as much as governments on their bonds. So account for this risk and encourage investors to buy their debt. Credit rating agencies assign a grade to the bond. AAA is their highest investment grade, and D is their lowest rating. To diversify, bonds can also be bought in index funds or ETFs. As a fixed income, bonds are seen as a less risky investment instrument than stocks. They are often used to diversify an investment portfolio, and there are a variety of types of bonds. The next of 10 assets that will make you money is real estate. Real estate remains a top choice among wealthy people as a great way to generate and store wealth, with passive income being an attractive bonus. Investing in and maintaining properties over the long term is one of their preferred strategies. Investing in residential and commercial property can be a great way to grow your wealth over time. Appreciation in the value of the asset, along with rental income from tenants, makes for an attractive investment opportunity. Everything sounds great, but it is not that easy. In order to make properties attractive for renting, repairs and maintenance are necessary. These come with the potential risk of not being compensated by tenants. However, when investing in real estate, it is important to select a property with great care, as selling it can be a lengthy process. It may take anywhere from several months to multiple years to receive returns from your investment. In order to increase a return, it is important to pay attention to other investments, such as properties that are priced lower than their true value. You can then renovate them and either rent them out or sell them. According to Robert Kiyosaki, real estate is his favorite investment, as he believes it provides a stable source of passive income and can appreciate in value over time. Now, if you would like me to create a video about Kiyosaki's method for creating wealth in real estate, please comment below the word video. Moving on to the next asset that will make you money is creating a business. One of the assets with the most potential for growth is starting your own business or partnering with one or more people. It is not necessary to start big. Rather, one should think big and take small steps towards that great vision. Running a business can be very time-consuming and energy-intensive, posing a challenge since it gives us a degree of responsibility. It depends largely on you to make it prosper. It is a combination of passion for what you do, creativity, quality products and services, a good understanding of the needs and future trends of the market, and the desire to serve others with your skills and talents that will make your business successful. Likewise, the company's capital and profits must be properly managed and reinvested in the company's growth, followed by investment in other assets. The range of businesses that can be started is wide, from buying and selling food, electronic devices, and customized items online, to car maintenance companies, construction companies, software development, mobile applications, delivery services, real estate, and restaurants, among others. Another type of asset that can make you money is digital assets. These are products or services that you can create and sell online using technology such as computers, smartphones, tablets, and the internet. These tools have made it much easier to reach and serve a large number of customers, regardless of their location or time zone. For example, if an expert wanted to teach a 2-hour programming seminar in the past, they would be limited by the space and capacity of the venue, and they would only make $1,000 from 100 attendees who paid $10 each. But thanks to the internet and modern platforms, they can now host the seminar online at a lower cost and attract more people who are interested in learning programming. They can also scale up their audience from 100 to thousands or even millions of people. If they charge $10 per person and 1,000 people sign up, they can make $10,000 in just 2 hours. And the best part is, they can record the seminar and sell it later, creating a digital asset that generates income for them even when they are not working. This applies to any digital product or service that can be licensed for commercial use by others, such as online courses, ebooks, videos, images, and music. The next asset that can boost your income is financial education. Financial education is the knowledge and skills that help you manage your personal finances effectively. It is a powerful resource that no one can take away from you. It is also essential for everyone to learn how money works so that they can make smart choices and protect their financial future. Financial education covers many aspects of money management, such as how to save for emergencies, how to invest in different types of assets, and how to generate additional income sources besides your salary. It also includes how to handle debts and mortgages, how to use credit cards and interest rates wisely, and how to plan and save for retirement. Furthermore, it helps you to understand taxes and how to take advantage of the tax benefits that are available to you. Having this knowledge is crucial for making sound financial decisions. To achieve financial success, you need to invest in the right mix of assets that can grow your wealth over time. These assets can include growth stocks, dividend stocks, index funds, mutual funds, cryptocurrencies, bonds, real estate properties, businesses, digital assets, and financial education, which we have discussed today in 10 assets that will make you money. However, you should also be aware that assets can lose value due to various factors, such as economic cycles, interest rates, policies, and government regulations, among others. This video is for educational purposes only and does not constitute investment advice. Please share this video, subscribe to the channel, and let me know what you think in the comments. Thank you for watching, and I'll see you in my next video.